Hello, and welcome back to another case study on the MW Futures Liquidity Scalping strategy. So this is a case study of Wednesday the 29th. This was yesterday, and a trade occurred around the 10 to 11 silver bullet hour. And let's look at the overall market today. So as you can see, a lot of liquidity has been taken out to the downside. We have been taking out liquidity to the downside all the time, and there hasn't been a valid fair value gap yet to enter off from our default settings. So let's move on a few minutes further, a few candles, and wait till the current custom bias. As you can see, the custom bias is right now still bearish. We have a finalized conflicting bias, meaning that we cannot trade yet. So we are waiting for all these biases to align. So let's wait for the bias to turn bullish, which is on this particular candle here. As you can see, we place a limit order of 10 contracts and we get tagged in. New liquidity pools have been generated. So instead of taking profit here, we place one TP here and there. As you can see also is that instead of 2 contracts here, it is split up into 1 and 1. And of course we have a lot of take profits over here as well. And this case study is mostly done right now around a new feature that just has been introduced, and that is the new mechanic of how going to break even is being handled upon market close hours. So as you see, our trading times right now are between 7 and 11:30. In before at 11:30, what happened was that we would go to break even, but once you are in drawdown, you actually close your orders out because the price is here and your limit order is, well, your stop loss is over there. So that means that you immediately get cancelled out, right? So let's go to the 130 candle and see what happens to my trade while it is in drawdown. So right now it's 130. As you can see, we are in drawdown. We have been moving above and under our entry all the time. And what does the next candle say? So first, new liquidity pools have been drawn again. And on that next candle, so that 11:31 candle, what we see is instead of that our break even price, our stop loss has been moved to break even. Right now what we do is that we actually drag all our take profit targets and put it at our break even price. So that is basically what has changed now, is that once the market closes and we are in drawdown, we want to exit as soon as possible. So we put our stops to break-even costs, meaning that we cover commissions and all the fees. And you will see that we hit our TP, and after that, we would have been stopped out otherwise. So this new feature, I already backtested it a lot, and it actually, a difference was that it actually saved me $2,000 over the backtests of the last 2 years. I mean, $2,000 over 2 years, it's maybe not be a lot, but once you add that up with when you're going to trade higher contracts, etc. For example, these are micros. $2,000 on the minis would have been $20,000, you know? So it adds up. So that was the trade review of Wednesday the 29th. I hope you enjoyed it. If you've got any questions, feel free to leave them in the comments. And I'll talk to you guys next time. Bye bye!
In the morning light, markets take their flight. Nasdaq opens tight, only 30 feels so right. Liquidity